Right now, you and I are living through one of the most pivotal moments in private market history, and most people have no idea that it's happening. Private markets used to be so simple. You wrote a check into a fund, the fund manager invested for you, and you just had to wait for the results. But some things changed. Today, whether you're in venture capital, private equity, or even family offices, everybody seems to be talking about co-investing. Why is that? Today, I'm here at a private, invite-only event hosted by LEVA, the Swiss syndication platform for easy co-investing, to ask investors on the ground what's really driving the co-investment boom. What's in it for the investors? What's in it for the companies? In this video, I'm speaking to multiple investors from VC to PE, and I catch up with Philippe, the CEO of LEVA, to answer why everybody wants to co-invest. My first conversation was about the reason why co-investments are interesting to investors. I spoke to Olivia Spencer from Aperture Capital, and I asked her what she's seen recently. Her firm has traditionally done co-investments, but are now looking to raise a fund.
I've actually discovered this since we started our roadshow for our fund. Speaking to a lot of family offices, we see that actually families really like investing in direct deals, almost more than funds, but actually they struggle to source the right deals. They need network partners for that. And so what we've seen is actually what could work as a good model is basically saying, well, because of our expertise in B2B fintech, we can source the best deals in that space in Europe. So we could be that for you, and also the insight. So if you put a portion commitment into the fund, then you can actually see all of our co-investments. A lot of family offices at least demand co-investment opportunities, and there's more interest in co-investment opportunities than in funds.
Is it more attractive in terms of fees, the co-investment?
No, not necessarily. I mean, it depends, because we would also charge something on the SPV side to make it worth it, but then it depends, then it's all in the negotiation. I don't actually know if some family offices might think or expect the co-investments to be really like almost free, because sometimes but it depends on the ticket. Like if you're saying I'm going to put a small ticket in the fund so I get access to all of these co-investments, then the economics on the co-investments, it needs to work. But if they're putting a big commitment in the fund, then we can do something on the co-investment economics. But we'll see, because we haven't completely finalized that.
So what we see here is interesting. Family offices don't just want simple exposure to private markets through a traditional fund. More and more, they want a seat at the table. And co-investments give them that without relying solely on funds. It's not even about the fees. For some families, the fund commitment is almost like a membership fee that then unlocks and give them access to the direct deals. And that explains why we see more demand for co-investments than for funds. Everybody wants to be in on a good deal, but they would like to see it firsthand and make the investment decision themselves. Philippe, who runs LEVA, sees even more reasons why people co-invest.
Well, I guess there are several factors why people co-invest. The ones that we hear the most is to diversify directly the risk when you invest, especially, let's say, in usual cases like in the VC industry, depending on the startup, how high they put the minimum ticket to enter even a cool venture. You take that ticket and you distribute it among your peers. Secondly, also to invest, it's costly, so you directly diversify also the cost with your peers. And I think the third one, and it's starting, I think, thanks to LEVA, back having fun, sharing deals with each other and doing it in a quick and efficient way, and making not only yourself potentially a successful investment, but also with your teams, colleagues, families, whoever your co-investors will be.
What's more is that private markets are growing as an asset class. While liquidity has been quite challenging these last couple of years, it's gotten better now, but there is still a growing demand for secondaries transaction as the asset class is growing. But what's in it for the companies? What do co-investors bring to the table?
My name is Matthew Stafford. I run a venture capital firm called Stafford VC, and we invest in early stage technology startups. All the investments that I do have co-investors. There's always a number of people that come on board, and sometimes I can bring co-investors, or I'm brought on as a co-investor, and it's really, really useful. The networks they can bring, the experience they can bring, solving problems, the more people that are involved in these startups, because they're new and innovative and doing unusual, interesting, innovative things, the more people can help with that, the better.
This is the view from a venture capitalist. We know that early stage investing is a unique field. The companies are new, untested, and the outcome is often unpredictable, but they're also pushing the boundaries and rethinking how we do things. That's what makes them exciting. And on a journey like this, it's good to have people who look out for you. The more the merrier. The culture of venture is built on collaboration. Ask and you will be given. Actually, I have a question for you. Would you rather put your money into a fund or join a co-investment directly? Let me know in the comments what you think. In private equity, companies are already much further along, or it's a platform play with proven business models. This changes things. Here I'm speaking to Tobias, who's a private equity investor.
Do you expect anything from your co-investors except the capital? Do you engage with them in any other way?
Not per se. It's a rather passive investment from their side, but we try to include them in the strategy and also try to include them in our Cameos network. We try to connect them with our CEOs so they can help us grow the business, make connections to new co-investors, for example, or just help them in general make us more successful.
So we see that here it's more about fundraising and less about customers or strategy input. But how does somebody who sees both VC and PE co-investments think about this?
Well, there are two ways, I would say. There are those co-investors that want to help and the founders say no. And then there are the founders say, please help us. And then you have the co-investors or the group who says no. And I think there's a very niche players where the founders are getting in syndicates with co-investors in order to have the added value of a group of peers. Let's take, for example, our case at LEVA, our cap table is formed out of syndicates. If you look at our cap table, we have 6 entries. Behind that 6, we have more than 50 investors. And every one of those 50 investors has a special added value to the company, be it sometimes for single projects, sometimes for just getting a venue like this, a place where theoretically you cannot book if you do not have an investor that theoretically have access to it. So there's different kind of ways that you can help, but there is the willingness, I think, is the key in order to make that happen.
But what kinds of investors actually do co-investments and what unites them?
It's been all sorts. I mean, so angels can get together and co-invest together. Sometimes that's informal groups of friends. Sometimes that's more professionally run syndicates. But even if it's a fund, one fund will typically lead a deal and then other funds will come along and co-invest alongside that.
So values, definitely. If we look how the syndicates are being grouped, what kind of investors typically are grouping themselves each other. It's sometimes same age, sometimes they study together, sometimes they work together, but what combines them typically is the value, because in the end you're investing, you're putting money along with others and you're trusting 1 or 2 or 3 people who found that deal. So you should rather invest with people who are sharing the same value with you. Outside, let's say, of investing, we hear a lot, they do dinners with each others, they have lunches with each others, they even go on vacation with each others, or they participate in events with each others. I think also from the social component is starting to pick up more and more, especially in the digital world, where one could think if you start to connect people, right, we're somehow more connected, but theoretically it's not the case. So they take the whole thing outside of the digital world and theoretically do it in the offline world and connect with each other.
We can see that there is an increasing demand for co-investments. We see it in all corners of private markets. A syndication provider like LEVA offers a bridge between traditional funds and individual investments. Investors are finding people who share their values, building trust, and creating real communities. Sometimes that means sharing deals, other times it's dinners, vacations, or friendships that grow out of these networks. So why does everybody co-invest? Because it's not just about diversifying risk. It's about alignment, access, collaboration, and community. The future of private markets won't be dominated by just a handful of giant funds. It will be shaped by networks of people coming together at an event like this and invest in deals they believe in. This is particularly interesting in Switzerland, where innovation and wealth are so close together. I've explored the hidden side of Zurich in another video, and you can watch this next, and don't forget to like and subscribe.